Would you like to know what determines 85 to 90% of your investment returns? The surprising bit, it is no secret at all. It is there on page 1 of every book on investments or portfolio management or fund management that you pick up, that asset allocation determines 85 to 90% of your investment returns and not individual stock or security selection. But we like to spend our time on this stock selection. That's where what we think about, what we talk about in parties, about this multi-bagger that we have found or that we hope to find. Whereas most of our returns are determined by whether we are in Indian equities, US equities, China equities, or for that matter, whether we are in equities at all or fixed income or commodities or gold. So that is where you should focus, because history bears this out. For example, between 2003 and 2007, you would have been underperforming terribly if you were in the Nasdaq, invested in the Nasdaq, because Nasdaq did not take out its 2000 high for 15 long years. And during 2003 to 2007, if you were invested in the emerging market index, let the overall index, not even individual countries, let alone stocks, you would have been up 3.5 times. In India alone, between 2010 to 2020, you would have been best off if you were invested in bank FDs. Surprising, but that is the truth. If you compare bank FD returns versus almost any equity mutual fund, you would have been much better off being in bank FDs. Even individual years, 2019 for example, the equity markets in India didn't do much, but gold was up 20%. Even government securities, the safest investments of all, were up by nearly as much. So please, when you look at your investment, spend more time and thought on where you want to be in terms of geographies, in terms of various categories of assets like equities, real estate, fixed income, commodities, and that will really help you optimize your investment returns. So hope that helps.